Welcome back. Now, Transaction Capital has swung from a profit to a loss as it faced what it called the most challenging and disappointing year in its history. The taxi financier and used car dealer reported a 3.3 billion rand fall in annual profit and is looking to restructure its SA Taxi's balance sheet to maintain its viability. Transaction Capital is also looking at unbundling We Buy Cars for a separate JSE listing. Jawno, incoming CEO for Transaction Capital, joins us now to unpack that performance in a greater detail. Thank you so much for your time, Jonathan. Of course, we have to start with SA Taxi because that is where most of the headaches have been experienced. How much more pressure has this business faced operationally and financially during this financial year?
I think it's been an extremely tough year for the taxi industry in general, and then obviously for us as being the major player in the taxi industry. And I think the real issue is, and what has been definitive this year, or the realization that we've come to, is that the hardships that we saw 2 or 3 years ago that we were hoping would just be a blip and pass by, have now become the norm or the new reality. And I think it's very difficult for the taxi industry nationally, and it's a challenge for the country as a whole. And obviously, we've been adversely affected as being the biggest player in that industry.
Yeah. And of course, I mean, you have spoken about the headwinds that are going on there that are a result of the kind of shift we have seen in the economic landscape. And of course, now, as you look to the future, talk to us about the operational restructure of SA Taxi that you are working on, the pillars of that strategy, and how nimble it will be to the structural shift in that economic landscape.
Okay. I think there's been a massive overhaul in the business. I've been actively involved since March and been working with almost a new management team in restructuring the business. I think the primary issue, and there's lots of operational changes, but the primary issue is very much data-driven, to be understanding the dynamics of what is going on with the taxi operator and trying to kind of preempt and make sure that the operators that we are funding are viable and that they continue to trade profitably.
Yeah. And in terms of the balance sheet restructure of SA Taxi, what does the financial structure, support structure look like? And what does the runway look like for that as well? And what does the balance sheet stabilization hinge on for that business?
I think fundamentally, the balance sheet restructure is substantially around reaching agreement with our current funders to kind of agree to continue to support this business through this challenging period. The restructure that's envisaged does not envisage any new funding coming in, but it's really about ensuring the support of the existing funders and allowing them to give the business time to kind of catch its breath and be able to bring the book under control, which is very much a function of the operators and how they perform.
Yeah.
As you know, key to that balance sheet restructure is that we as Transaction Capital, from COVID up until March of this year, having invested 2.2 billion rand, which is a big amount for a small company like ourselves, into the business as equity to support the business and to demonstrate our faith and commitment to the business and the industry, as well as an additional 285 million rand that we've committed to the Santaco partnership, because we feel that it is vital that Santaco continue to be a shareholder in this industry as the major stakeholder in the industry.
And also, how pervasive have these headwinds at SA Taxi been on the rest of the business and particularly on Newton?
So there's definitely been an impact across the group because of the size of the taxi balance sheet relative to the rest of the group. That said, at a Transaction Capital level, the business is extremely well funded, as it is at We Buy Cars level, and Newton for that matter. The headwinds that we've experienced, if you want to call it that, in Newton, have really related only to one aspect of the business, which is our business that invests in non-performing loans. We have had liquidity and we have had funding throughout the year, and particularly our major banking partners who've been bankers of ours for many years continue to support the business because of its strong fundamentals. But that said, there have been some funders who kind of look at transaction capital as a whole, and they've said they would like to pause kind of until they see how taxi plays out, even though the taxi balance sheet is completely ring-fenced from the Newton balance sheet.
Yeah.
Which on the one hand we understand, and we hope that that will be a temporary thing, and things will open up in the months and years ahead.
So from my understanding, the situation with SA Taxi is now on stabilizing that business and strengthening it rather than growing that business significantly. So I want to move on to where Transaction Capital will be looking for growth in the other businesses. And I actually want to zoom in on Gomo, which is still a new business. So talk to me about the growth of that business, the growth that you have seen so far and what the momentum looks like, at least in the short to medium term.
Right, so Gomo is a very exciting initiative. That said, it is not something that we will grow quickly.
Yeah.
We have already passed the kind of the development stage of it, and we are now financing taxis directly onto the Standard Bank balance sheet off the WeBuyCars platform. So it's up and running. It's been running in this way since June of this year. And it really is based on around creating alternative products that are not pervasive in the vehicle asset finance industry and that are relevant to the WeBuyCars platform. So this is not a competitor per se coming into the vehicle asset finance industry, which is a very saturated market, but this is looking at saying, can we, with our WeBuyCars, Standard Bank, and our credit IP, create funding for a different market that is possibly not access, that probably doesn't have access to the traditional banks. So it's something that we are excited about, but equally it is not a big growth vector in the short term.
Also, just looking at WeBuyCars, I mean, that performance came from a high base in 2022. And I'm wondering if this current more normalized earnings profile would be satisfactory enough for an unbundling and separate listing of that business.
Yeah, I think that we were very excited with the WeBuyCars performance in this year. I think one has to see it in the context of a sum of two parts, and that the first half of this year was a year that we had to recalibrate off the abnormally high base of 2022, which was driven by all the dynamics that worked in the favor of the second-hand car industry because of what went on in the new car industry. But the business quickly processed that, and if we have a look with substantial growth in the second half of the year, being only 4% off what it was in the second half of 2022. So that is a lot of positive momentum, and we've seen that positive momentum carry on into the early part of this year. So we really do believe that the second-hand car industry is an extremely relevant industry. I mean, we sold over 145,000 cars approximately last year, and we see this as a high growth industry. And within it, we see WeBuyCars as uniquely positioned. It really has a different proposition to anybody else in the market, and there's nobody near the scale of it. And because of that scale and efficiency, it really is, it can offer a differentiated experience and pricing to the customer. And therefore, we believe it's an exciting company, and we think it has doubled. The business has more than doubled in the 3 years that we have owned it. And we really don't believe that it's running out of steam. It's very technologically enabled. There's a massive investment in technology, and that pays off in terms of the customer experience, the ability to price vehicles correctly, and to optimize the actual running of the business. And that combination, together with the fact that it is run still by the founders with a very, very strong management team, really, we believe bodes well for this business to grow significantly into the future.
Yeah. And just lastly, as we wrap up the conversation, Jonathan, just going back to SA Taxi and what we can expect there. Can we expect the business to be on a firm footing maybe in the next year, or maybe is this a multi-year turnaround?
Well, that's a very good question. And what we are targeting as a business and working with our funders to achieve is that we almost take a 3-year window and say to ourselves, we've been in this business for 20 years. So, and we'll be in it hopefully for another 20 years. So for us, this is an important recalibration within the history or the overall industry. And we want to really take time to get this right. And therefore, the approach that we're adopting is that the next 3 years will be a period of stabilizing the business and also deleveraging it and actually bringing back the exposure of a lot of funders and repositioning it only into the second-hand car market, into the second-hand taxi market, which will be completely, there's nobody else really focused exclusively on this market. And so for the next 3 years, from a reporting or earnings point of view, we are not focused on earnings of this business. Primary focus is on cash flow, is on deleveraging the business, really positioning it with the funders, because the priority right now is A, to continue to service the operators in the industry, and B, to ensure that the funders are able to recalibrate and restructure their debt, to make it viable for them. Because ultimately, in the long term, no lending business can be successful without funders. And so really the priority for us as shareholders is to say, notwithstanding that we invested 2.2 billion, as I mentioned earlier, and I've got another commitment to Sintaka of 285 million. The priority in the next 2-3 years, besides continue to service the market, is to actually look after the funders and ensure that the funders get a good outcome, and shareholders kind of have to take a back seat. And so what we are saying is, as an equity shareholder in Transaction Capital, this is a business that will emerge hopefully as stronger in the future. But right now, it's about ensuring that we maintain our relevance in the market and we maintain our ability to be well funded, because that's what ultimately will ensure our long-term success. And really, as you know, the taxi industry is extremely important. The public transport in this country has had its challenges and continues to have its challenges. So it's extremely important that the taxi industry continues to get access to funding, and particularly the market that we service that is not funded by the traditional banks. So, this business is really about including and bringing into the credit market those operators that would not otherwise have qualified for finance. And that is kind of the vision of our business. That is why we have been so well supported by the development agencies and many of our funders. And we have to ensure that we can remain relevant and continue to play that vital role in the broader taxi industry.
All right. Well, thank you so much for unpacking those full year results for us and also the growth and stabilization trajectory going forward. Jonathan, really appreciate the time. That was incoming CEO for Transaction Capital, Jonathan Jawno.